So already Kajal ma'am has given my introduction, and still I will give my in few lines my introduction. I am Anil Godghase, former Assistant Director of Town Planning and Valuation from the State Government of Maharashtra. I have worked in this department for more than 31 years. And then now I am IBPR registered valuer as well as. Please everyone mute. Please everyone mute, so that I will not. And so I have handled many types of failure evaluation cases. I have worked on this land acquisition, then MIDC evaluations. I have worked in this registration department, and so many times this income tax department, they suppose they come across any difficulties regarding these guideline rates, because this is the guideline rates is the base for the capital gains, and many times they required the rates in 1981, then 2001, and how these rates are affect the valuations, because what happens, these rates are not in general published by the governments many times, particularly in the 1981 rates. These rates were confidential until 1996. So, so there many times we have discussed with the income tax officers also. So I have huge experience in this field. I have handled more than 5,000 valuation cases actually, and more than that, and given so many development permissions. And second thing, these development plans, regional plans, these FSI, all these matters here. When you are working as a valuer, you should have these ideas. You should have the prima facie knowledge at least, because every state has their own rules, regulations, then development control rules, development plans, regional plans, everything. So many town plan schemes, because these factors matter here, because valuation is the base. And these redirector guideline rates, these are very, very important. Whenever I have on behalf of government, I have to attend many times to the courts. At that time, the court asks evidences, and what is the evidence there? So suppose someone is saying that the market rate is 10,000, someone is saying 15,000, someone is saying 18,000. But what is the base for this? Only evidence will be the registered documents then. So that we will discuss in detail then. But Abhay, I will try to explain in practical manner rather than going on in theoretical way. I have given, you can easily get the material from the websites, but still what is actually required, that I am going to explain today. So straight away, I will go for my presentation first. Is my screen visible now? Is screen visible, Kajal ma'am?
Yes, sir.
Okay. So this is my brief introduction. I have already given my brief introduction. So this capital gain nowadays, this is the very important topic. Topic. Please, Ajay Jaydeep Singh, architect, please mute your mic. Everyone, please mute. Then if you have any queries, keep the questions reserved. Otherwise, in between, I can ask questions. But whatever you want to ask, then you can, after I will give 15-20 minutes for the questions, then that we can discuss then. So exploring the fundamentals and implementation of capital gain tax and role of failure. The role of failure is the major role here. And nowadays, the property values touch to sky. And second thing, what happens? It is difficult to get the evidences. Suppose you are handling some any valuation cases, capital gain, whether it is from the movable side or immovable property sides. So you require to give evidences there. And how you can collect the evidence, that I will explain today. This capital gain is related with the real estate, then investment property. Investment, that means so many people are interested to invest in particularly commercial sector. Then some are from the real estate sector. They want to invest some, because what happens in this sector, you can in few years you can get huge profit here. These are the sectors which real estate particularly. Now real estate is in boom, but what happens in the corona situation? Now suppose you are handling the same cases, At that time, the rates were fallen too much, and so many people they have asked me, sir, what to do then? At that time, the situation was different. The rates were fallen, and now we want to compare these rates. So that we will discuss. Then stocks, mutual fund, bonds. These from the security side, these people will require this. There are different rules for the particularly for the movable properties. Different rules are applicable. For the immovable properties, different rules are applicable. For the plant and machineries, different rules are applicable. So we will discuss everything here. Now, what is capital gain? Capital gain refers to the profits earned from the sale of capital. Whenever you want, suppose you bought one property in 2007 or 2018, 2015, but government thinks that you are gaining some profit there. And that's why they impose this tax. You earn something, and based on this income, you need to pay some tax. That means for the capital gain, they particularly consider the stocks, real estate, bonds, plant and machineries. I already told. So this purchasing price is very important here. Yeah. Please, Amit ji, please mute. So please don't disturb me so that my link in continuity. So remember, everyone knows. So because you people are, I think most of the people have almost practicing more than 25 years, like I think. So everyone you know this, but still I'm going to revise something part. And still we will discuss in the 15 minutes, the last 15. The capital gains can be categorized into many types. Everyone knows short term and capital long term. But for the immovable properties, movable properties, and certain properties, there are certain rules. And government has given certain date. Which is that date that matters here in capital gains? From that date, all the rules have been changed. Can anyone ask? What was the date that day, from that day? For the particularly indexing cost, you need to which cost should be considered?
Earlier it was 1981, 1st April 1981. Now it is 1st April 2001.
But these are the indexing years. But why you are going to this indexing year, 1981 and done? From where they have decided, government, central government, finance ministry has taken decision. But which is the
31st? Is it 31st January 2018?
31st March 2017. From the 1st April 2017. Whenever suppose you have sold any property, whether it is from the movable or immovable side, that we will see in detail. I have on the next slides, everything is available, but still we will discuss first so that while reading, you will get some ideas here. Suppose you sold the property in 2012. And suppose you have sold the property today. Different indexing year you need to apply there, right? So suppose this property is being sold before 31st March 2017. That means you need to go for the indexing in 1981. You cannot use the indexing for the 2001 year. But suppose this property is being sold today, then you will go for the indexing in 2001. So this is, government has taken this decision. So it is difficult to get these rates there. So many valuers, so because I was working as an assistant director of company valuation in redirect rate, particularly guideline rates, circle rates. So many valuers, they were asking, sir, we want these rates. Income tax department has given notice, what to do? But these rates were confidential and we cannot, in writing, we cannot provide these rates. But this was the base, this was the only base. You can, because what happens, the income tax commissioners, income tax officer, they ask to submit evidences in major cases, not in minor cases, remember. So in this situation, we will discuss what is meant by short-term capital gain and what is meant by long-term capital gain. So the capital gain, it is not a separate tax. Yes, remember, this is not a separate tax, but it is the part of the Income Tax Act 1961. उसका ही पार्ट है, लेकिन गवर्नमेंट ने कुछ चाहती है कि कुछ इंफ्रास्ट्रक्चर डेवलपमेंट के लिए तो फंड होना ही चाहिए. तो सोचते हैं कि infrastructure or any industrial sector or commercial sector, if government has funds, then only they can start the development there. So I think it's due to this, government might have decided to go for the capital gain. They know these people, those people who are working in the particularly these sectors, they are earning huge profit. And so these are the provisions in the Income Tax Act only. So what assets?
ये तुम करते रहो और ये तुरंत अपनी जमीन खरीदो और जब
So income tax assets held there for more than 24 months before its use sells for the particularly immovable properties, immovable properties. So it will be treated as a long-term capital. It may be treated as a long-term asset, or you can say it is a long-term capital gain. Then how to calculate, how you use the indexing, how to go for the cost of acquisition, that is different part that we will discuss in detail. So remember, whenever the period is less than 24 months, that means it is the short-term capital gain. But if the period is more than 24 months, it will be the long-term capital gain. But particularly remember, some they have given 36 months. Read this last paragraph here. But for which purpose they given these 36 months? Excluding these immovable properties. For the immovable properties, it is 24 months. But for other properties, it is 36 months. And that this date, I have already told this date, from the 1st April 2017. Suppose you bought the property into 2nd of April 2017. Then you will have to go for the indexing year in 2001. And suppose you bought the property on 31st December 2016. Then you will have to go for the indexing in 1981 then. So these costs matter. And how you will calculate the cost then? Straight away you will go for the rates and you will try to calculate the valuation of the particular property, whether it is a movable property or immovable property. Because those who are working from the security side, they will require to go with different ways. Those who are working as a plant and machinery valuers, they will need to collect different data then. But those who are land and building valuers, that means they need to go with the land rates, building rates, then go for the depreciation, how to calculate the depreciation. Everything will be required. When to give depreciation value, that matters. So valuer should have the thorough knowledge on this. Then only he can defend the case. Suppose client has asked you, sir, I'm suffering with huge capital gain here, and he is not satisfied with the whatever notice given by the income tax commissioner. In that case, what will happen? He may approach to the valuer, will ask him to submit the report. And what will be your duty then? You will try to collect the evidences that we will discuss then. So this short-term capital gain, long-term capital, this I have given detail here for your, some people, most of the people know, but still those who are not familiar with it, they can read this. For the particularly this movable sector has different rules. What is written here? For securities listed on a recognized stock exchange, equity-oriented mutual funds, zero coupon bonds. So for this, the period is only 12 months. But for the particularly in immovable properties, they have given the period of 36 months and 24 months. So remember this. For the other assets like real estate, the period is 24 months. So you must be alert on this. While submitting your reports, you should have the knowledge of this. Though you will say, sir, we are the valuers. What is our duty? But client is expecting the tax also. So you should have the at least prima facie knowledge on this. So you can suggest him, sir, it might be cost, this much will be the cost, capital gain tax then. So remember this, okay? So read this for, I will be 1 minute, then we'll proceed. there are different rates applicable. Remember, for the short-term capital gain, different rates, the income tax, they may modify the rates. Finance Ministry, they have the power, they can change these rates. So 20%, 30%, accordingly, it depends whether the property when this property is being sold, whether you are going for the short term, then different rate of the tax will be there applicable. Then for the long term, different rate will be applicable there. So remember this, for the long term immovable properties particularly, they will charge almost 20% there, right? For this short-term capital gain with movable properties, suppose you have sold your necklace or anything and you got short-term profit there. In that case, you will have to pay almost 15% tax. If you sold the necklace within 1 year, and suppose you have sold the necklace after 2 years, then that tax may get reduced. The rate may get reduced up to 10% then. But for the immovable properties, if the property is being sold within 24 months, then you will have to pay the tax at the rate of 30%. But for this, suppose the in long term, you will have to pay the tax at the rate of 20% then. But these rates government can modify time to time. This is the long-term capital gain. I have already told this 20% tax and thing, everything. So suppose it is given here. If an asset is sold within 36 months of acquisition, black slide. So I will go with the next slide. Okay. So for instance, if a property is sold within 27 months of purchase, it will come under the short term. But remember, for the immovable properties, whether it will come under short term or long term, then 27 months period. Can anyone answer? 27 means the person is selling the property after 27 months. That the property is immovable property. Whether it will come under short-term capital gain or long-term capital gain. I have already told this. Can anyone answer?
Long term.
Yes, naturally. Remember this. Don't get confused here. So read this slide. I have given in detail here everything. This 31st March 2017, whenever you are handling any assignment, suppose your bank has given an assignment, whether it is from the liquidation or option side, they are, suppose you want to handle, you are handling such assignment. Many times what happens, you will have to handle mixed properties. Then what you will do? Then you will, accordingly, you will have to take the decisions. This plant and machinery and land and building, these are interrelated with each other. So suppose you are a land and building valuer under such 34 AB. You cannot go for the plant and machinery valuations there, because you must have that registration. Then only you can go with that particular side. Then land and building valuer has different powers. Securities valuers have different powers, because this securities valuer, they cannot go for the immovable properties valuations. So shall I go to the next slide? If you read this slide, then because this is the base for any capital gain. Whenever you are handling any capital gain assignment, you will need to go for this from this only. Then now this is one most important point, and most of the people have ignore this. But many times I have guided many times what happens in big cases, particularly big inquiry cases? Income tax department take the help of the town planning departments. Why it is necessary? Because they are these officers, these income tax officers, they are the non-technical officers. And now, if suppose they want to calculate this particular capital gain tax, what are the rules there regarding these distances? You know, everyone know, agriculture land situated in any rural part in India not treated as a capital asset. So this is the rule from the central government. Finance ministry has declared that we will not take the capital gain tax from these people if the land is in agriculture, from the agricultural side. But for the certain agriculture lands also, this land also comes under capital gain. That which lands comes under this capital gains then? That I have explained here. So these parameters government might have be changed. They change time to time. It is not mandatory that every time this will be applicable. Suppose government has modified, they will publish in the gazettes, government gazettes, that this will be the rule, this rule is being changed from this day, and everything will be given there. So remember, agriculture land situated beyond the jurisdiction of a municipal cantonment board, municipal region, whether it is a municipal corporation, some different rules are applicable. Municipal council, different rules are applicable. Some cantonment board, different rules are applicable. Because these sectors come under the urban sector. And this, the income tax department treat that they suggest that these properties have some latent value. And based on this, they will go for the capital gain tax there. So remember this, and then how to calculate these distances? Suppose municipal limit is over. Then what to do? Income tax department, suppose the property comes within the distance of 5 kilometers. But how he can decide that this property comes in within the 5 kilometer? Because he do not have the scale, he cannot count the measure on the plan. So many times we have to give this. They were referring such matters with our department, because we people have the development plans available with us, and based on this we can easily calculate the distance whether it comes within this range. So up to 2 kilometers from the local limits, but I will explain, then we will go for the reverse slide. So this is one of the municipal councils, C-class municipal region here. So what I am suggesting here, so income tax department, what we have said here, agriculture land situated in any rural in India is not treated as a capital asset. But what happens here? This is the municipal limit. That means this is the urban area. This is the urban area boundary. Here the limit has ended. Now what will the other outside this? All the parts will be treated as a rural area here. Then how, but still the income tax department suggests that the up to 2 kilometers from the local limits of the municipal council, then they can, these properties will also come under the capital gain tax. Suppose there some transactions take place within that much range. So this is the limit, these are some limits given here. You can confirm these limits again, because it might be modified. Up to 6 kilometers from the local limits of municipality and for cantonment board. For the population, they have decided the criteria of the on the basis of the population. They are deciding this range of the distance. Then up to 8 kilometers from the local limits of municipality or cantonment, that means the population having. So these are some figures given. Now this indexing, everyone may be familiar with this regarding this indexing. I think what is indexing here? Index numbers, government publish these index numbers. What is index numbers? Why the government publish these index numbers?
Cost
It is
inflation.
written here. Cost inflation, yes. Cost inflation is the major reason, and the every year central government finance ministry publish these index rates. So whether you are, whether the government will observe the situation, whether the current situation is, whether it is an inflation or deflation situation nowadays. क्या लगता है आप लोगों को, सब अभी इन्फ्लेशन चल रहा है या डिफ्लेशन चल रहा है?
Inflation.
Inflation. So remember this, because this taxes matters. This is the major revenue government can get. They know from this real estate sector or some industrial sector or commercial sector, they are getting huge funds from this capital gain tax. So this cost inflation index are published annually by the Indian government, are used for calculating the long-term capital gain tax on the sales of assets figures. So these are very important. This I think, what is the current cost index? Can anyone? So many people are practicing here. What is the current 2023 to 2024?
343.
363,
343. Yes, almost correct.
363.
348, shayad. 348. Okay, we will see. I have given some indexes, but remember, you need to collect this data because these indexes matter here. Whenever you are valuing any property, they may, suppose someone is asking you to submit the report for the 2005. Someone is asking to submit your report in 2007. But index will be different for each year. And if you do not have the indexes available, then what you will do? Because this indexes matter here. What is the formula? You need to calculate, go to the calculation for the index cost of acquisition. How you will calculate the index cost of acquisition? I have given here. Cost index of the year of sale. Whenever, suppose you are selling this property in 2024, then you need to go for the index CII of the year of sale then. And then year in which you have first time acquired this property, that we need to consider. And then actual cost of acquisition. Whatever cost you have at that time was prevailing, that cost need to be considered. And this is the requirement for the valuers. यही तो रोल है वैल्यूअर का. तो इनको इंडेक्स कॉस्ट ऑफ एक्विजिशन आप प्रॉपर कैलकुलेट करते हो तो यू विल नॉट मेक मिस्टेक in calculating the capital gain tax. And suppose you are not getting the data, then what you will do? You need to go collect the rates also. At that time, what was the prevailing rate going on? So remember, this index cost of acquisition is very, very important. And for this, government has published these indexing rates. But remember one more thing. For the 1981, different indexes were there. So in 1981 to 2001, different indexes were there. In 2001 to until 2024, some different indexes are there. Because whenever you will observe that when the transaction has taken place, that is the most important date you need to consider here, right? Whether it is from before 31st March 2017 or whether it is after 31st March 2017, that matters. And accordingly, you need to go for the index numbers. Otherwise, suppose the property is sold in 2023 and still you are using the indexes of 1981, then you are making mistake there. And suppose the property is being sold in 2006 and you are using the indexes of 2001, still you are making a mistake there. So remember this. Shall I go to the next slide then? Okay. This is the formula. Remember, everyone knows, I think, but still, these were the indexes. It is given here. Financial year 2001 to 100 was the base year index. This was the base year index was 100. In 1981 also base year index was 100. In 2002 to, in 2024, because in between it is difficult to view all the figures. I have all the figures available with me. But in 2023-24, its been index is 348. So remember, you will require this. Sometimes you will, because what happens? Many people, you will say, sir, why to go for the back dates? Can
होता
anyone
है।
suggest? क्यों जाना पड़ता है? बैक डेट के लिए क्यों जाना पड़ता है? बैक इंडेक्स भी आपको लगते हैं, क्यों लगते हैं?
If there is certain value addition within the period from purchase of the property till the disposal of the property, then that capital indexation cost will have to be added to the said valuation. So we need the previous year's cost inflation index figure also.
Yes, yes, yes. So that means, suppose you have made the agreement in 2007. It was registered with it will be valid. Whenever you are going, when you are going to register, that doesn't matter. But still you have registered, you have made the payment, you have given by check, the payment. That is valid. So at that time, what was the cost? Acquisition cost, that is required. Now these are some, whenever you are handling any assignment, how you will proceed for the valuations. This is the base. From this, you can easily work out any kind of, so whether the immovable property or movable property, you can go with this. Whenever you are performing handling any assignment of the capital gains, first full value consideration, then you will require the cost of acquisition. Unless you have the cost of acquisition, you cannot index that property. And sometimes you will get the benefit of indexing. Sometimes you cannot get, double benefit cannot be taken there. First time you have taken the benefit and again you are taking the benefit. It is not allowed there. So the cost of acquisition, then cost of improvement. Suppose you have bought one property in 2008. And then for that, you will need to go for the indexing for that particular year then. But suppose later on you have improved the property in 2014. Then you will require to go with the 2014 indexes for that development improvement. Then. Suppose you have again improved the property in 2018. That means this is nothing but the cost of improvement you need to consider. You will require these indexes again. These indexes are very important, remember. Then full value consideration, cost of acquisition. Whenever you are handling any assignment, first straight away go for the cost of acquisition. Then cost of improvement. When if suppose someone has added something in the buildings or plant and machinery or anything, so or in, for the security side, some gold or anything, this patent or anything that comes under the security side. Then index cost of improvement, I have already told. Read this given in detail here. Formula will be the same. Remember, formula will not be changed. जो भी ईयर करंट ईयर का जो भी आपका जो इंडेक्स है वो आपको यूज करना पड़ेगा और जो ईयर में एक्वायर्ड किया था प्रॉपर्टी वो ईयर का इंडेक्स आपको लेना पड़ेगा. इंप्रूवमेंट जैसे कि मैंने कहा, आई हैव सजेस्टेड दैट इन 2014 and 2018. So you will have to use that indexes here to calculate the index cost. And unless you calculate this index cost, so whenever you are going to calculate the capital gain tax, what will be there? You need to deduct all these factors, all these cost from the total cost. This full value consideration, whatever may be the full value consideration from that. Suppose you have made some spent some charges on stamp duty particularly, or some brokerage charges, or some any other expenses, such expenses, then you will have to deduct these from this full value consideration, and then you will get the net capital gain. And based on this, whether the property comes under the short-term capital gain or long-term capital gain, accordingly you will apply the tax rates then and will calculate the work out the capital gain tax there. But remember, government has given some options, but they may modify these exemptions time to time. Central government has the powers. according to the section 54 of the Income Tax Act, you may get some exemptions. Can anyone tell me what are these exemptions? आप लोग बहुत सारे practice करते हो, तो कहाँ आप benefit लेते हो exemptions का? What are the rules there? किसी को पता?
brokerage charges and transfer fee charges.
नहीं, वो तो regular charges, exemptions की बात. I am asking about the
Investment
exemptions.
in government bonds. Investment in government bonds.
Yes. But there is certain, they have restricted this amount up to 50 lakhs.
Up to 50 lakhs,
Infrastructure
right.
bonds, infrastructure bonds.
Yeah.
So remember this. Second thing, you can invest
We
this
can-
property.
Means you want to say that if I want to waive the capital gain tax, what should I do, right?
Suppose you want to save your capital gain tax, then what are the options available with you?
Sir,
That is
I
I'm
can
asking.
take a real, I can purchase a property, means residential property.
Yes, but there is certain period there, ma'am.
That is 2 years if I'm taking financial 2 years, and if I'm taking a land and I'm constructing that one. So two
Yes.
financial and plus 1 year. And for that
Yes,
one, I
yes.
have to keep my capital gain tax in capital gain in a bank account. And accordingly, I have to pay, and before 2 plus 1 financial year, I have to complete it, that one.
Yes, absolutely correct. So remember this, you can save your capital gain tax, but you have to again going to invest. So government is getting something there. Very good then. These are some exemptions given here, but government can modify these. Remember, you need to read this news regarding these exemptions, because they can modify at any time. But remember, they will publish in the government gazettes. Government gazette में publish करना, it is a mandatory for them. So this is the period given here. Read this. I will give 1 minute and then we'll proceed. Shall I go to the next slide then? Okay, fine. So for the plant and machinery, different rules are applicable. Remember, land and building valuers have different rules. Plant and machinery valuers have different rules. Security sign valuers, they have some different rules applicable. So because the securities valuer, which type of properties the securities valuer handle then? They will go with the movable properties valuations, remember, most of the time. Some exceptional cases might be there, I don't know, but some gold jewelry valuations. Whether land and building valuer can go for the gold value, gold jewelry valuation.
SFA, sir, SFA generally value all those things which are nature of financial assets or movable there.
So in your balance sheet, they use these figures there. Okay.
कुठल्या तरी पुस्तकातनं बाहेर पडलं.
Sanjay Joshi, please mute. Fine. Then this for the plant and machinery valuers, the rules are different there. So if a businessman, suppose he has some industry, he has started one in his business 10 years back, he must have bought the machinery there. And after 10 years, whether the value of that machinery will remain same or what? It will change. Why it will change? Because you are going to calculate the depreciated value of the particular machinery. Same thing with the land and building here. So the value will goes on changing, but you need to consider this depreciated value here. So these are some rules given here. Suppose some jurisdiction a specific tax rate, but remember government has some decided some for the particular industrial areas, some different rules are applicable there. But whenever you are going to calculate this depreciatory value, you need to use certain methods of valuations there. The methods. That means a constant percentage method might be there, sinking fund method, then straight line method. So book value method, most of the CAs use this book value method because every year they need to show these figures. Whether your company is in profit or loss, you can decide from this balance sheet then. Then gift and will. So yeah, one read this carefully. This is very, very important for the valuers, those who are practicing. They will require, you need to have some evidences regarding these gifts. You need to read these documents carefully because many times some income tax department have served notices on these gift documents. And I have handled such 2-3 valuation cases while working as a town planning officer. I have given 1, 2, 4, 3 confidential reports regarding these gifts, gift deeds. So remember this, if a person gives his capital asset to any other person, then the no capital gain the hands of the person making the gift. तो आप बोलोगे फिर ये कैपिटल गेन यहाँ से कहाँ क्या एप्लीकेबल होता है? But suppose Mr. Sanjeev has gifted this property to Mr. Sanjay here, Anandji, and now what Anand is doing? Anand has sold this property to me then. But Sanjay will not have liable for the capital gain tax here, क्योंकि उनको जहां पे उन्होंने गिफ्ट दे दिया, यहाँ पे उनको कोई प्रॉब्लम नहीं है. लेकिन संजू से संजय ने लिया, संजय से मैंने ले लिया, संजय ने बेच दिया प्रॉपर्टी, तो संजय ने बेचने के बाद वो क्या होना है, मेरे पास आना है, तो वहां पे उनको कैपिटल गेन एप्लीकेबल हो जाए. So remember this, if the person receiving the capital asset by way of gift will subsequently transaction, after that, suppose he has carried out some transactions, then you will have to consider the capital gain tax. You will have to pay the capital gain tax. And then at that time, again, you are going for this indexing there. You will require these indexes. So read this, I will give 1 minute. Then we will proceed.
कम से कम
Please
हाँ,
mute Ram,
ठीक.
please mute Ram Jeevan. These gift documents need to be read carefully, remember. Then reference to the valuation officer. यहाँ भी there you will observe two types of valuation officers. That means you are also valuation, you are not the officer being, but you are a registered valuer. Your role is different here. How the private valuer's role is applicable here, and how the government officer, that means the income tax commissioners, deputy commissioner, assistant commissioner. I have discussed many times with these officers regarding these cases. At times, the process of completion of the assessment of taxpayer or the tax authority need to ascertain the value of capital asset. This is, remember, whenever you are going to impose this capital gain tax, you first thing, what they will do then, the role of the valuer will be there first. Then he will calculate the value of that particular property. Then only he can proceed. And यहाँ पे बहुत सारा सबसे important part जो आता है तो guideline rate का आता है. Remember, whenever they come across any difficulty, they will straight away give the letters to the registration department. There the town planning officers are working there. They know the rates of the particular year, government rates, prevailing radiational rates for the year 2001, 2005, 2007, 8, 9, 10. Because these inquiries may be for the past dates. So you need to go with these figures then. This, you must be familiar with these guideline rates also. This is the direct impact, this will directly impact the valuation cases. And many times they have called us to submit these rates in the courts, because the court want to verify whether the valuer has submitted the appropriate rates. They have verified, and then only after that observing these rates, they have given certain decisions there regarding this capital gain case. So remember, this reference to the valuation officer is very important. There are two types of valuers there. One, they are from their department's valuers. Also in the subsequent slides, I have provided all these things there. Remember, you are also a valuer, and there in government also there is valuer. Then you will say, what is the role? What is the government valuer's role then in the income tax department? And what is the private valuer's role there? Because you are also a registered valuer. So you are handling some cases, you are submitting your report to the commissioners in appeal cases particularly, or some, if you are not satisfied, you can go for the appeal. So now these are certain provisions, legal provisions given in this. As per section 55A contains the provisions relating to the power of the tax authorities for the reference to the valuation officer. He can take the advice of their registered valuer. In income tax department, so many valuers, income tax officer, they are working as a valuation officer there. So they may give the reference. Consider, suppose you have submitted your report. On the next slide, I have provided this, but still I will explain first. So suppose one of the parties, one of the client asks you to submit the report because the income tax department has given the notice to pay huge capital gain tax, almost in crores. But the party decided that this was not the property valuation. Someone has made mistake there, and unnecessarily I am suffering. So in this situation, he can go for the appropriate valuation, and he may approach to registered valuer. He will take your advice, and now what you will be your duty then? You will try to collect the data and the appropriate evidences, the past sales, what was the zoning, what was the FSA permissible there. So the prevailing rules, everything, this matters. And then you will proceed for the valuation. And then you will come to the conclusion. You will estimate the valuation. And on the basis of estimation, you will recommend the value. Remember, always you are going to recommend. So after recommending the value, you will the income tax officer will ask you to come for hearing and submit whatever what they were saying. How you have come to the conclusion, explain. So in this situation, the role of failure will be there. That we will go with the next slides then. The basic provisions in section 55A has provided the circumstances in which certain circumstances are there. In particular cases, they will go further. Otherwise, suppose the value is only they have to pay the capital gain of only 55,000 or 1 lakh. They are not interested in such minor cases. But in particular big cases, basic provisions section 55 has provided that circumstances in which and the purposes for which a reference could be made by the tax authorities to a valuation officer for a valuation of a capital asset. This is given in section 55 of the Income Tax Act. Before getting into the detailed provision in this regard, it is important to understand provisions relating to the nature of valuer. I have already told, two types of valuers are there. One is registered valuer and other is a valuation officer. Valuation officer means he is from that particular department, income tax department. And registered valuer means you people are the registered valuers from those who got the 34AB registration. They are the registered valuers here, because these IBVI valuers cannot submit their report to the income tax department. But particularly if the matters related with the Companies Act, then only IBVI valuers can submit their reports. Okay. So there are two types of valuer then, registered valuer and valuation officer. So read this. I think I have already explained. Then we'll proceed.
Sir, one doubt is there.
Keep your doubt reserved. We will discuss after concluding this.
Okay. Okay, sir.
we will discuss.
Okay, please.
Sure. I will give answer. So shall I proceed to the next slide or wait for 1 minute? This is very important. Remember, your role is here. But what type of case need to be valued by the register valuer? I will go back to the slides and then I will discuss, because I have guided some income tax officer regarding this, because they were also facing some problems, and actually what had happened, I'm going to tell them. So there come the registered valuers, because the some registered value, they have the knowledge. Some valuers, they are from the architect side. They are some consultants. They know the zoning and everything, and this zoning matters here. If you have the thorough knowledge on these development control rules, then development plans, then only you can proceed with this. You should have the knowledge of this TDR also. Then ancillary FSI, this matters, your valuations. And how that affect the valuation, that one example I will give. Just I will go to the, I will explain how the income tax officer has served the notice. Now observe this. This property is partially in residential zone, this particular survey number. This is the ring road, and I have handled such type of valuation. And I have submitted my report to the income tax department. They have they asked to submit the report. What had happened actually, this is the C-class municipality, but suppose the property was from the municipal corporation area, then huge rates will be there. Rates will be too much high. In particular, the residential rates are too much high as compared to the agriculture rates here, right? So now suppose this property is in residential zone, actually the sale transaction taken place from this agricultural zone. But what had happened actually, in redirectional rates, guideline rates, when there is partial zoning, they only provide the square meter rates only. They do not provide the agriculture rates there. And what had happened, the party has purchased that land, agriculture rent, and for this adjacent rates was there, only 25 lakhs rupees per hectare rate was prevailing there. But for this, the rate was almost 2,000 rupees per square meter. And now what happened, the person who bought this property from the agriculture zone, and he was also suffering with this 2,000 rupees per square meter rate there. And now they have taken the transaction, they have done the transaction, the sale deed is completed but what happened? He has submitted, he has done the transaction, the deed get registered there. Now the valuation was almost 1 crore 75 lakhs valuation was there. And for this, for the same property, you can go for the only 25 lakhs per hectare was the valuation there. So there was huge difference in valuation. 25 lakhs is different and 1 crore 75 lakhs is different, huge different. And then almost they have to pay 30% capital gain tax. So in this process, what will be happen then? If the party is, suppose the party is not satisfied, then what will be the option for these parties then? He will straight away go for the appeal. But remember one thing, what had happened actually, they have not, the income tax department has not accepted that this property is from the agricultural zone. They were saying that you have accepted. What happened? Initially you should have gone for the adjudication or anything. There are certain provisions in this Registration Act particularly. That means section 31 of the Registration Act. You can go for the, if you are not satisfied with the valuation of the guideline rates, then you can go for the adjudication there. And then you can reduce the valuation of the property because there was certain mistake there. No mistake from the government side, but what happened? The partial zoning. But the government has decided, it's a government policy, because I was the assistant director of town planning at that time. And many complaints were there. Sir, what about the partial zoning? You are not giving the agriculture rates there. We are suffering huge loss there. So many builders were complaining. But it was the government's decision. We cannot do because the state government has taken the decision. We have to follow these guidelines. But public is suffering here. So remember, in this case, suppose the party is not accepting this, he can submit and he can go for the appeal and later on prove that this was the agricultural zone. And due to this, you should apply these rates. And my valuation is only 25 lakhs, but you are applying 1 crore 75 lakhs. My land cost is 25 lakhs and I'm paying the tax 40 lakhs. This has actually happened. 30% tax, suppose they have to pay, that will be more than the property value. So this should not happen. Then valuers should be alert about this. So remember, there come the valuers role. Then these are the department valuers. You can complain. Suppose some officers have some doubts regarding some particular property. Suppose in particularly heart of the city properties or some commercial properties or some such properties, those properties which have some latent value, they can also go for this. They can refer the matter to their internal department valuer. There is one wing of these valuers there. And in this case, department valuer, what will be the role of the department valuer then? He will submit his valuation report and accordingly the valuation, the income tax commissioner will serve the notice. Then if the client is not satisfied, then he can go for the private valuer. He can again prove. And there come the role of the registered valuer. He can prove them. The circumstances in which reference can be made. This is given here because I have already explained this. You just read this, and if you have any difficulties, you can note down this, and then later on we will discuss this. I can answer yes, sure. Because I have handled such cases. Some cases due to zoning, these people were facing some problems there. Suppose you have submitted your report. Suppose registered valuer has submitted, I have already given the notice. Then also the department can, if the department is not satisfied with the registered valuer's report, then they can refer this matter to their official departmental valuer. And then he will verify all the documents. He may take your hearing. He may ask you to submit evidences. So in this situation, what are the evidences here? What will be the evidences? Being a registered valuer, you are handling some particular case here. Suppose the land and building valuation case is there. What will be the evidence here? And from where you will collect this evidence?
Sales instance from registered
Instances.
office, registered
Yes.
office
Yes,
of
yes.
that particular year.
Yes, yes. This is one of the these sales you can use. Then second thing, some land acquisition matters might be there. You can collect the data from the collector offices there. This also you can use. But major, because whenever you are submitting your valuation report, you need to go with the evidences only. Nowadays, I think IBBI has also asked you to submit your evidences. Whenever you are submitting, they will take your hearing and then ask you to give presentation regarding this major case. So we will proceed with this then. If the assessing officer is of the opinion that the value of the asset as the taxpayer is at variance with its fair market value. What is meant by fair market value? Everyone knows, but still I am asking again. Don't get confused between this guideline value and this fair market value. But they will use both the figures here. If they found the huge difference in between this fair market value and this guideline value, then they will naturally they will ask you to submit the tax or will serve the notice then. In such case, there is a no quantum of variation to be established, then not necessary. अगर यहाँ पे अगर difference नहीं आता है ज्यादा, अगर government का उनका जो valuer है, उसका report और आपके report से match होता है, you will not go to, you will accept your report and accordingly you will have paid the tax there. But suppose he is not satisfied with your report, you have submitted, suppose they have served the notice to pay certain tax and you have submitted report with the almost, suppose the property has valuation of almost 3 crores and you have submitted the report with almost 1.5 crores. That means 50% difference, huge difference is there. And then they will check the regulatory guideline value also. If there is difference of more than 10%, then certainly they will consider these cases. And in this situation, you have, being a registered valuer, what you have done then? You have submitted the report with 1.5 crores. That means almost 50% difference is there. That means being a registered valuer, you have collected the appropriate sales data and everything, whatever evidences you have submitted this. On that basis, you have come to the conclusion. And based on this, I have used this method, and on this basis, I have come to the conclusion with this 1.5 crore. So this you can prove then. And the assessing officer, if assessor officer is in the opinion that whatever report submitted by you, we are not satisfied, then he will refer to his departmental valuer. And then departmental valuer will give his report. And if the assessing officer found that there is huge difference in between two values, then again, they will take the hearing and their legal proceedings, they will carry on them. So I will proceed with the next. Shall I go to the next slide then? I have already explained this. But remember this third point. Regarding this point, government can modify the rules. How much should be the difference in between fair market value, then this guideline rate value, because they try to use both the values there. And nowadays it is common practice. The banks are following the same practice there. They will check your guideline value also, regulatory value. And if they found the difference is more than 20%, then they will try to take other valuer's opinion then. Because if you are submitting wrong reports, it may lead to NPS then. That having, remember this third point, that having regard to the nature of the asset and other circumstances, it is necessary to show currently and the rate and is the prescribed value. Whatever rates given in the guideline rate, what is the fair market value, many times it is difficult to get these higher side valuations there, because major difficulty is that what is the intention of the most of the people. It is a natural tendency, it is a just human tendency. Everyone will try to save the proper stamp duty charges. So in the process, what happens, you will find almost 99% documents will be at the rate of the guideline rates, plus minus 5%. That's all. Because I have carried out inspection for more than almost 50,000 documents, more than that. But I have experienced that almost 45,000 might be documents were with the only recorded with the almost rate matching with the guideline rates only. We cannot do anything. This is just nothing but the parallel economy factor comes there. Then that's why it is difficult to calculate the fair market value here. These are provisions of section, there are certain provisions in 37 Wealth Tax Act 1957. Section 37 of what it suggests then. Under section 142A, there are also provisions. The assessing officer for the purpose of assessment, reassessment, they can review the case. Suppose you are not satisfied with the government or the decision of the officer, you can again will request to the authorities, sir, can you review this matter again? They got the powers there. Make a reference to the valuation officer. Yes, they can. I have already told this. Read this. This some theoretical part I have collected from the sites also. If they are not satisfied, only they will refer to their departmental valuation officer then. But practically what happens? So suppose I will give one example here. Suppose Mr. Sanjay Joshi bought the property from Mr. Anand Kumarji for almost 2 crores. Okay. But what had happened? The valuation in the guideline rate, it was showing almost 6.5 crores due to zoning problem or any other problems. But what happened? Mr. Anand Kumar has paid the stamp duty by considering this 6.5 crore valuation. What will happen? Naturally, this value is beyond there is difference of almost more than 10% here. But he has paid the stamp duty according to the 6.5 crores. That means he has accepted the value. So in this situation, Income Tax Department has given notice to Mr. Anand Kumar now. What will be the role of Anand Kumar then? He will approach to the registered valuer and will ask to give evidences. But what had actually happened? The income tax officer has rejected his plea and said, you have accepted this figure. Then initially, why you are not gone for these other proceedings in that particular department? If you have enough evidences with you, then why you are not gone with this adjudication or whatever proceedings available with you? So that means he has to pay the huge capital gain tax then. Otherwise, again go to the court. What will happen? When you will go to the court, it is I think it will require almost 5 to 10 years for the decision then. Until then, what will happen? So remember this. So the valuer officer, the valuation officer shall estimate. Always remember, you are estimating value. Because Mr. Ramjivan, suppose he got one assignment, the same assignment or the same property, Ramjivan will submit some different report. Mr. Sanjay will submit different report. Mr. Anand will submit different, because you are estimating. Everyone has his own thinking. Everyone has some plus minus factors. Particular property has certain merits and demerits. Based on this, you will estimate your valuation. So that means all these valuers will have some different opinions. So always remember, whatever evidences based on this, try to recommend value. Estimate the value of the asset, property or investment after taking into account such evidences. Remember, this evidences is very important, because I have visited many times to the high courts or district courts regarding these land acquisition cases or some other cases from the registration department cases. So every time they have simply asked, just submit your evidences by giving past sales data, past data for the last 3 years. Bring that data. But being an authority, we can easily produce. But what about the private valuer? It is difficult to private valuers to collect the data from these government offices then. Who will give these records then? So remember, after taking into account such evidences as the taxpayer may produce any other evidences in his, and he can gather. That means it is the role of the valuer here. After giving an opportunity being heard, वहां पे आपका वो hearing लेने वाला है. जो भी गवर्नमेंट का वो जो assessing officer है, he might be assistant commissioner or deputy commissioner or anyone. He can take your hearing, and he will suppose the assessing commissioner is not satisfied with your report, then he will refer to his valuation officer and again ask him. But he is saying correct. Suppose he is satisfied with report, but still some doubts in his mind. Then still he will not take risk in this situation. Then he will try to take advice from his valuer there. And it is these are some practical things. But what happens? Most of the people do not prefer to go for the appeals. Though the genuine, so many genuine cases I have observed, so many times I have guided to so many people, but the final opinion is that, sir, it is difficult to get the decision within so much period. So, but there are certain projects, then why not to take the benefit? This I already told them. The non-inventory assets, capital gain tax relationship with this non-inventory assets, that we will see what is meant by non-inventory asset. That means some long-term assets are there. Which are the long-term assets here? कौन से हो सकते हैं लॉन्ग टर्म के एसेट? कौन से हो सकते हैं? Plant and machinery, because suppose you have started your own business, your industry, it will be long-term asset. Then naturally land and building will be required. Land and building will be the long-term asset here. And suppose you are from the security side. You are holding, so you bought some shares or some mutual funds or anything. But suppose you are holding these shares for almost 5 years or 10 years. It will also be for a longer period then. So for this, whenever you want to, the assessing officer will go with the valuation first and will decide the tax then. Everyone knows this, but still. No role of valuer, I have already told, but still we are going to repeat this because this is more important. Sale of transfer of property, whenever, remember, it's your duty being, you should guide your client first. Whenever you are going to take some, suppose you are accepting whatever value given in the guideline rates, you are not satisfied with these rates. Many times what happens? I will again go to this previous slide and will explain, because I have actually handled such cases. Suppose what happens in the most of the redirectness, they provide these rates. Suppose this is the main road of the city here, and almost this is 30-meter road, and the entire survey number, suppose this survey number is up to this road now, right? Bigger survey numbers are there. Many survey numbers are bigger survey numbers might be there. But what happens? Suppose you are going to sell this property, but in the guideline rates, they have provided only this highway rates or these 30-meter rates. Then naturally, this property has different value, but still it is difficult to prove them. So remember, you should, whenever you are going to transact such property, initially try to take objection first, so that it will be an evidence. Otherwise, what will happen? Suppose you have accepted that figure, you have paid the stamp duty there. That means an income tax officer will not entertain them. And this practically had happened. That's why I am suggesting this. At least you try to give some evidences, try to keep some reserve with you. In the court of law, you can prove them. Sir, at that time, this was the emergency with us. We have already paid such much, this much amount. This property is clearly inside the, it is not touching with the main road, but still they are applying these rates. So this will be the evidences with you. Then inheritance or gift, I have already told. So this, suppose after later on, someone has, after getting gift, he is selling that property. In this case, you will require to go with this capital gain tax. There come the valuer's roles, particularly in probate cases. But this probate valuation of in particular cities, these probate valuation offices are available. Then financial reporting. It is very important for the finance. Suppose you are running your own business or any commercial, suppose you have started your own industry. You are running with, then at that time you will need to go with this financial reporting. Whatever the last year's figures, the balance sheet will be required here. The CA will give the figures, that means original cost will be mentioned in there. So that means whether your business in profit or not, that you can decide here. Then how much tax you will have to pay, that you can easily predict here from this financial reporting. Whether your business, suppose you are paying huge taxes there, then you might suffer loss in business then. And this is given here, sale of transfer of property description. When property is sold, transfer determining its fair market value. Fair market value is different. This for this financial reporting, for preparing accurate financial statements, it is required. A company needs to report the fair value of its real estate holding in the balance sheet. Yes. Some in legal disputes, so many legal disputes might be there. Particularly in real estate, you will find such a legal dispute there. So in order to resolve such disputes, you will require to go with the property valuations there. And many times what happens, suppose some disputes are going on, then matter will go to the court. But remember, court will ask you to submit whatever stamp duty or whatever the taxes, government taxes. You pay first, then we will decide. After getting this decision, it will get refunded. But before that, you will have to pay full stamp duty or capital gain tax there. So in this situation, you must have some certain evidences with you. And being a registered valuer, you should try to solve such legal disputes by giving appropriate valuation reports. Then loan collateral, securities and securities, particularly while giving the loan, bank will ask the valuers to submit their reports. In certain auction cases also, you will require to submit your reports. Some ARCs, they will also require these valuations. So in conclusion, I can say the role of valuer is pivotal role in various financial and legal transactions as well as in other matters also. Now these are some, I have already told this, but still we will, you should have being a practicing valuers, you should have know this term at least. Because it will require while handling such cases. Non-inventory assets, these are the assets that a company or individual holds for other than resale. Suppose you are not going to resell that property, that means it is a long-term investment there. So in this, that means the plant and machinery, then these mutual fund debentures or some shares, you can hold for this long term there. Some land and buildings, naturally these are some sound properties. You cannot sell the property overnight. It will require a certain period. So that's why these are some non-inventory assets. There are certain characteristics of non-inventory assets. That means long-term use. These non-inventory assets are most of the times that it is for the long term, not regularly sold. That means you will not, suppose you bought one property, some industry or some with plant and machinery, and you will not sell within 2 or 3 months or 6 months or within a year. Because you have already invested some amount, you have taken some huge amount of loan, then you will run this business or industry and then get certain profit, will try to repay the loan, and that means this is not regularly, you will not sell it at the regular interval, then subject to depreciation or appreciation. Sometimes you may get the depreciation, but suppose you are running your own industry, the plant and machinery might be old after 10 years. and the building also will become old. Then you need to go over the depreciation there. You need to calculate the depreciated value there. So read this. I will give 1 minute and then we will proceed again. These examples of non-inventory asset I have given here for real estate property, land or building owned by company or individual in operational or use, right? Then this is the scenario given here. This person has bought the property for rupees 50 lakhs and hold the property for 10 years. And later on, he has sold the property, same property for 80 lakhs. That means he got some gain here. He got some profit there. And now naturally you will have to pay the tax. There come the role of the valuer here. He will go for the depreciated value of that property then. Then other rates will be required. The land rate might be different there. So this is the scenario where valuer's role will be there. He will calculate the value. And then accordingly, according to the value, you will have to pay the capital gain tax here. Then next, regarding this machinery and equipment side. So this person, manufacturing company, buy a piece of machinery for certain amount, but the value of the machinery will not remain same after 10 years, 15 years. It will be depreciated value then. And then second thing, some technology is getting evolving nowadays. Day by day, the technology is evolving. This may be outdated then. So accordingly, all the factors must be considered by the plant and machinery valuers there. Then investment securities, I have already told this. This person has invested, buy some shares for 10 lakhs rupees. He hold the shares for 3 years. Now he got the amount of 15 lakhs here. He will be eligible to pay the tax there. The CA will work out this. It is not the role of the land and building valuer or the plant and machinery valuer here. These shares are non-invested asset, remember. Why it is? Because this is a long-term investment. More than 1 year, he can treat it is treated as a long-term investment here. So that's why he has to pay the tax according to that rates only. These patents and trademarks, this also comes under this. Remember, otherwise you will say, sir, this. But remember, you are gaining something here. You are gaining some profit here from this by selling this intellectual property rights owned by the company or individual. So a tech company, one scenario given here, a tech company develops a new software. Now the technology is evolving and so everyone, Google is updating and all other sites, they are going to update. So in this situation, suppose certain, you have your own, your patent then, and you have to sold the patent, then you will gaining something. You are gaining some profit there. In this situation also, you will have to pay the capital gain tax. Read this, then I will proceed again. So this example given for understanding purpose, not because how you will have to use the indexes here. Everyone knows, but still for practice purpose, someone might be new here. Don't get confused in between the properties, whether the property is related with the land and building or with plant and machinery. I have observed that when I was working as a valuation officer in the town planning department with the registration department, some people, those were not the plant and machinery valuers, only the land and building valuation, they were submitting the report with the plant and machinery valuations. It is not permitted. So I was also not a plant and machinery valuer because I have carried out the land and building valuation. But then ask the concerned person to submit the authorized registered valuers plant and machinery report. But these people, now it is a common practice, in so many cities. Second thing I have observed and I have practically worked, that's why I am suggesting this. CA cannot submit the report of this plant and machinery here because our land and building valuation there. He must take the advice from these particular registered valuers only. Otherwise, he will make mistakes because he do not have the enough knowledge how to go for this depreciation or how to use these land rates, how to go for the zoning, and in particularly for the plant and machinery valuers also. It is difficult to get the similar type of data there because every industry has certain type of machineries, and it is difficult to compare these plant and machineries there. So try to collect such data. Suppose you are not getting data in your area, you visit the adjacent places and then try to collect such data. That will be better for you people. Now this is the situation here. These guideline rates, I remember, income tax officer will always go with the guideline rate because they have to, suppose you are going to the court of law, you are not satisfied, then you need to go, you will require the base figure at least. What is the base here? But these though these are the average rates, but still somewhere matching rates. So court will ask the income tax officer to give the reports, what are the prevailing rates in these ready reckoners. And it had happened many times in these capital gain matters. So you must know, in this case, difference is more than 10%. And that means you were sure you will get the notice here. You will say, sir, for the stamp duty purpose, we have paid this, but actual valuation was this much. Yahan pe hai. This purchase price in 2010 was 50 lakhs rupees. Now the guideline rate in 2023 is 1 crore. And actual sale price, now you have sold this property for 70 lakhs. Difference is almost 30 lakhs. So there is huge difference. It is more than 10%. So now income tax department will ask you to pay the tax according to, they will use this 1 crore figure. They will not accept this 70 lakhs figure. But because why? Because you have paid the stamp duty there. He will ask you why you have not gone for the adjudication or section 31 of the Registration Act. Later on you can reply, that is different thing. It depends on that officers. Suppose your case is genuine, then he may accept. They have the powers. And second thing, you are going to first, this is the index cost of acquisition. Now, how to calculate this index cost of acquisition, that everyone knows. I will not go in detail here. But where these index numbers will be required, when this property is being sold, how much is the difference? It's the role of the valuer.
Sir,
We will discuss. Wait for a 10-15 minutes. I will answer. Okay. This for the plant and machinery valuers. This person bought the machinery here. The useful life was 5 years here. So how to work out depreciation here? He can use, because it is the role of the valuer to which method he should go for the depreciation. Because most of the value, I will suggest to go with the sinking fund method. But for the earlier age, which method is better, that you can decide. For the earlier period, you can go for the straight line method also. But for the, suppose the building life is, or the plant and machinery life is 35 or 45 years, the depreciation the straight line method will not be applicable there. because you need to consider the depreciation, same depreciation for the 5 years, for the 10 years, for the 50 years. You are going to consider the same depreciation here. So remember, in this situation, I will suggest go for the sinking fund method there. This numerical is there, but it is difficult to explain. We are considering the time slot. But for the study purpose, I have given this. This after 3 years, this person has accumulated depreciation value. He is using this straight line method here. So that's why he has directly calculated this figure. Depreciation expense per year multiplied by the number of years. That's all. To consider this accumulated depreciation here. And by deducting this value from this book value, the initial cost was this much, 5 crore was the initial cost. Then he has deducted this accumulated depreciation. This much was the cost, capital gain gain for this almost loss is there, is suffering some loss. Now one more regarding this property held for the property tenants over the 10 years period. The company depreciated the building. The initial cost of the building was this much. And he is using the again straight line method here. These are some key points you need to remember. Whenever you are practicing as a valuer, you should go with these factors. These are very important points. Significant difference. That means how much is the difference in between the guideline rate value, your fair market value, and actual sale transaction. All these figures matter here. And by observing this difference only, you will have to submit accordingly. Valuer will decide. And accordingly, what is the purpose of the valuation? Then accordingly, he will collect the evidences there. Whether to go for the higher side or whether to go for the lower side, it depends. Then accurate calculations are very must here for the calculation of capital. It is related with the finance. It is related with your finance department. No one will prefer to go with the higher side taxes. So these redirectional rates are very important in this, particularly in capital gains. Then regulatory compliances. Many times government may modify the rules. So you must be in touch with these regulatory compliances. Second thing, not only this, suppose you will say, what the regulatory compliance, every year they will not change. But remember, not only this, but the other factors which are required for the valuation, they might be changed there. Suppose the development plan, earlier the development plan was not sanctioned, but the plan has been sanctioned. Now the development control law, government had some modified certain rules. So that matters, affect your valuation there. So remember this. Then now come to the conclusion here. Understanding the fundamentals and implication of capital gains tax is crucial for making informed financial decisions. Whenever you are starting your own business, some industry, or suppose you are developing some real estates. So many times I was working as a guideline valuer, redirector valuer, or I was an assistant director of town planning there. Some promoters, builders comes to me and then said, sir, actually municipality has sanctioned the development plans. And most of the times what happens, suppose municipality, the government has decided to extend the municipal limit and they have included almost 20-30 villages. It is happening, particularly in Bangalore, Mumbai, then Pune, Ahmedabad, then Surat. All these cities are expanding. From the in this situation, what had happened? Government has sanctioned the limit, extended the limits. Now these villages come within the municipal limit. Then different rules are applicable there. Now those properties which were not eligible for the capital gain tax, these also come under the capital gain tax, because the rural part also comes within the municipal limit. Now it is difficult. It is the role of the valuer now. He should have the technical knowledge here. What are the prevailing rules going on? he must be familiar with this. Otherwise, he will make straight away, he will make the mistake there. It should not happen. So these certain distances, I have already told, this 2 kilometers, 6 kilometers, 8 kilometers, the income tax department straight away asks to the government department will submit how much is the distance. Now, this rural area comes in the municipal limit, in the urban area. And now the land cost is too much high. And you will find huge difference. Earlier, the land was in the rural sector. Now the land has come into the urban sector. And now the land value has been changed. And huge difference will be there. And you will have to pay huge stamp duty. Not only the stamp duty, but also you will have to pay the additional capital gain tax there. And it may happen, whatever the property value, and that much will be that almost equal capital gain tax you will have to pay. This had happened actually. So now by leveraging this cost inflation index, taxpayer adjusts the cost of acquisition, inflation, deflation, all these factors matter. So be careful while handling these capital gain cases, assignments. And this is the final conclusion then at capital gain tax and the pivotal role of the valuer. Whenever you are guiding anyone, so many value, suppose some you are one of your friend or some clients come to some business there or some plant and machinery, some industry, new industry goes to start, then he will face some taxes problem here. And you people are here. You can suggest, you can by suggesting, he will ask you, being a valuer, I want to buy this land here. I want to construct the building here. What will be your opinion? How much should be the price of this land? How much should be whether I will have to pay huge capital gain here? Initially, suppose you initially you are not familiar with this capital gain tax. You have decided to buy a particular land, and later you came to know that almost you will have to pay certain amount of tax there, capital gain tax. And initially you have decided that this much money will be for my industry or for my business or for the particular real estate. Then you may suffer huge loss there. So this is the role of the valuer there. He must guide the particular persons that you can go with these properties now. You need not pay huge tax here. So thank you and all the best. I think I have tried my best by considering giving some practical examples here. Theoretical part is also covered here, but still, thank you and all the best for you people. And now you can ask some questions.
Hello.
Oh.
Hi, sir. I'm Anand from Bangalore.
Okay, sir.
I have a query in this capital gains.
Mm-hmm.
Then when the sale value is less than the guideline value or circle value,
Mm-hmm.
is there any provision in the income tax so that before the sale happens, I can take a report from a registered valuer and take an exemption from the income tax?
No provisions, because when the sale transactions will take place, then only income tax department will serve you notice.
But
Unless-
as a valuer, as a client, I know that exactly the price is lesser than the guideline value. And is there some provision, somebody was telling on this, there's some provision so that we get exemption if we submit a report from a registered value before the sale happens?
So
Is there any such
I
provision?
have already explained this, but I will repeat again repeat. What happens? Suppose you are selling the property and I am buying the property now. Okay. And suppose actually we have decided that this property valuation is, suppose it is 75 lakhs.
Right.
And now we have visited the sub-register office. There you got the valuation, and there the valuation, you found that valuation was almost 3 crores. Huge difference there. We are actually selling
1 crore, sir. It's not huge difference. Say we'll consider with less than 25%. 1 crore.
20%, but still you will have to, if there is difference of more than 10%, there are no rules. But if you exceed certain limits, what happens? This income tax department will consider these guideline rates. They have the only base available with them, and they will try to compare this. What happened? You have done the transaction here. You have paid the full stamp duty there.
No, I'm not paying, sir.
You will,
I am arriving a rate
remember,
from a sub-register.
unless you complete the transaction, they will not serve you notice.
No, before serving, I am preparing a valuation report from a registered valuer
Mhm.
and telling this is the actual, and this is physically, it can be checked, verified also. A income tax registered valuer is giving a certificate. With that, I can go, can I approach income tax department for exemption?
Why income tax department will entertain you? Why they will serve you notice there?
Thank you,
Why?
sir.
Because they do not have any evidences with them. When you will register them, they will get the evidence. Remember, I have worked in this department for more than 10, 15 years in registration department. It is the mandatory rule. Whenever you, nowadays this 5 lakhs is the very minor figure. Whenever you, any part of the state, when you register the document and the valuation is more than 5 lakhs, that automatically reflects with the income tax department. So, but nowadays, earlier, 10, 15 years, that 5 lakhs was matter. But nowadays, I will suggest they should increase this limit.
Okay, sir. Thank you.
For one difficulty, should I ask?
Yes, sure.
Sir, I have come across one particular valuation in Mumbai, particularly in the area of Royal Palm, wherein
Okay.
the ready reckoner or circle rates are much higher as compared to the prevailing market. That means the market valuation is done at a drastically lower rate as compared to the ready reckoner rate. Now, considering the three approaches of valuation, cost approach, profit approach, and market approach, according to me, market approach is the most appropriate approach for the purpose of comparison of this particular transaction. The income tax authorities have served a notice to the assessee saying that the valuation so shown on your transaction or index to whatever is much low as compared to the valuation as per ready reckoner rate or circle rate. I have done the valuation taking into consideration I have collected at least 15 sale instances from the same building in the same property, and all these transactions have taken place at drastically lower rate than the ready reckoner rate. And I have tried to substantiate my valuation to the proper figure. Despite the income tax officers have served a notice by their valuation officer and asking my justification or clarification for that. What clarification should I give?
So remember the same case here, but similar cases. Because what happens, this problem, everyone will face this problem. What happens? There are certain provisions in the Registration Act 1908. That means before going for the, suppose what happened? You are accepting what you are doing here. You are accepting these guideline rates. That means before going for the valuation, suppose you are saying that these guideline rates are too much high. Almost suppose there is difference of almost 50%, 70%, 80% might be more than that. But what happens? You can avail the benefit of this adjudication here. But what happened? Again, same thing, because all other 14 people have registered the document. You will not get the evidence here. You cannot do anything here, because these all other people have accepted the figure, whatever the figure with the ready reckoner rates. No
No, sir.
one is taking
No, sir,
objection.
no, sir, no, sir. Say for example, the ready reckoner rates are to the extent of 20,000 and the transaction has taken place at the rate 12,000.
Right?
I have produced at least 15 incidences wherein the transaction have taken around 12,000 plus minus. And I have given the valuation report to that effect. As on one hand, we are saying that the ready reckoner or guideline rates are only and only for the purpose of levy of stamp duty.
Right?
And as you are suggesting if I am paying the stamp duty as per the income, what you can say, registration office have asked for, will it
Right.
amount to the conclusion that I have willingly admitted and accepted the stamp duty or valuation laid down by the registration office?
So remember, what you are, suppose there are 15 transactions has been taken place, right?
Yes, sir.
So now, but you are saying that all the people have said that the rate was 10,000, 11,000, 12,000.
Yes, sir.
But,
Fair value.
they have paid the stamp duty according to the 20,000 only.
Sir,
So that's why these income tax officers will not accept. That's the major problem here. It is written that this guideline rates are only for the stamp duty purpose.
yes,
But these rates, most of the department for the paying land acquisition, they are using these rates. Then for the property taxes, they are using the same rates. For paying the getting the benefit in the ancillary FSI, TDR FSI, everywhere, you will have, they are using these guideline rates. But these are the decisions taken by their respective departments.
sir, I
Then
do
you can
agree.
do.
I do agree. I do not deny to the fact. But at the same time, when we are saying of the approach, then the market approach is the most proper yardstick for the
Yes,
purpose
yes.
of valuation. In that
Yes.
case, considering the 15 sale instances taken place in the same building, I have quoted all these instances by way of index 2 and all everything I have produced. But eventually, the income tax officer is not agreeable to that for the reason that you have admitted this particular figure and you have paid the stamp duty accordingly. For my clarification, if I would have done the proper adjudication or appeal, as you are rightly suggesting,
Mhm.
to the concerned authorities, in that case, the actual transaction would have taken substantial time.
Yes. Naturally, it will take almost 6-7 months then.
Substantial time will be lapsed,
Yes,
and
yes.
transaction at the end of the day may come out to a futile
Right.
because the parties will not agree to that.
Yes, yes. But
Then in that,
what happens? You cannot do anything here because it is the decision of that income tax officer. He should because he will ask he will go with these evidences, and he got the enough evidences. That means all the people have accepted this stamp duty. So that we cannot do anything here. What to do then? Only way I can suggest, you can request to the registration, that means Inspector General of Registration, that these rates are too much high.
Hmm.
And because everywhere, every year, you are going to revise these rate reckoners, these rates. And
Yeah.
at that time, you will have to prove. And because I have already done, I have prepared this rate reckoner for the 8 districts. I was the officer there. But what happens? Most of the times, we do not get the lower side sales. We actually consider this only whatever sales transactions taken by considering the only stamp duty rates only. So that's why it is difficult to reduce the rates also. So try to complain with the registration department, deputy director of town planning valuation. It's a separate office is there
Yes.
in Mumbai. You can, but remember, you single should not submit objection. So many people in the society, they should take the objection, then only you will get the benefit. Otherwise, it is difficult. 1 or 2 or 10 people are taking objection. No one will enter to anything there because being an assistant director of town planning, I have done the same job. That's why I was suggesting you to take objection with the most of the people. Almost 100 objections might be there. So then they will consider. Otherwise, they will not.
As I have suggested, I have produced at least 15 sale instances from the same building, which are within the rate of 12,000 or thereabout. And ready reckoner rates are 20,000. Virtually, you can say 40% more.
But sir, one thing remember, everyone has accepted the stamp duty rate. No one is taking objection here. So
Otherwise, the
this,
transaction will be so prolonged that it will not have any meaning as
but
such.
that is our personal reason. But
Yes.
as per the rules, you cannot do
Oh,
that. That's why
Okay, sir.
I am repeatedly saying that
Yes, yes.
this is the problem valuers facing.
Yes.
Still, suppose if I get this assignment, I will also face the same problem here. But I will go with certain other factors and will try to reduce the valuation. That is the
Okay.
only way.
Okay.
You use some certain demerits, merits and demerits, and try to reduce the valuation. And
Okay.
submit the report and take the appeal. Go with the appeal with the commissioner. And these are other evidences with us. And according to submit, these are the other supporting documents with you. That 15 documents, all the people are saying that this rate is only 12,000. That means it may be acceptable with considering other factors.
Okay. Thank you, sir. Thank you.
Okay. So, any other question then? Otherwise, we will stop. Note down my number also. You can, because suppose you are facing any difficulties regarding these particularly development plans, these development controls, because these factors matter the valuations here. This TDR, then ancillary FSI, then these development plans, regional plans, then town planning schemes. These are the factors which directly affect, and these you can avail the benefit of these factors. So note down my number, 88 55 81 37 06. Again repeating, 88 55 81 37 06. So I think there is no other, there are no other questions then. So thank you and all the best for your future.
Sir, please repeat once again your number, please.
88, note down.
Yes.
88 55 81
Yes.
37
Yes.
06.
Okay, sir. Thank you.
So, Kajal ma'am, are you there?
Yes,
Sorry, sir.
So we will conclude the session then.
Yeah. So today Shama sir is not there. So on behalf of him, I'm going to close the session. Thank you, Anil sir, for such a lovely session. And thank you all the participants to be active participants. And thank you, sir, for the informative session. Thank you all. Have a nice evening.
Thank you.
Thank you.